Morning, everybody. How are we all doing? Morning, Danny. Morning, Peter. Morning, Joe. Morning, Chris. Happy Monday. Back again. I'm late. Sorry. Busy. I've got some glasses on as well. Look. Right. So this morning we got quite a few ADRs already gone off. Morning, Marco. So they're going off at the moment. Aussie dollar CAD has hit ADR. We've just had a big spike up for some reason. So we'll have a quick look at the news. These have all just literally just triggered. So it looks like something has just happened to the Australian dollar. US-China tariff reduction to exceed 100%, 728. That was half an hour ago. It's not that. Not quite sure what that is, but we'll find out in a bit. Something's just happened anyway. So yeah, so big spike up on the Aussie dollar. So something has affected the Aussie somewhere. So there's loads of ADRs. So just be a bit careful with the ADR reversals. These obviously aren't worth taking. You're not going to get a signal off of that anyway. But Euro odd and Euro CAD also hit. So Euro odd is going to be the inverse. Euro CAD also moved. Oh, right. Okay. So everything's moving basically. It's just the Australian dollar seems to be affected a little bit more, but everything is just whipsawed there, literally on the 8 o'clock candle. So good. Just a big price spike up by the looks of things. Don't know why. Interesting. Sorry, bear with me 1 sec. See what happens on the indices. Yeah, so the indices have had it as well. Oh, that's annoying. Okay, so there's not going to be any trades today, I don't think. Way too big. So maximum range on the FTSE is 330. That's 660. DAX, way too big. 2285, and we're looking at 11296. So we've just put in roughly 80% of the average daily range there in one candlestick. So there's no trades today on the indices. That's nice and easy. We don't have to worry about those today, do we? So yeah, not going to trade that. You can try and fade it. Aussie New Zealand 125 ADR. So you can try and fade these moves potentially, but I'd wait for them to stop first, obviously. It's annoying for my Aussie New Zealand short. I'll definitely be getting a fourth position on that one this morning. Banked this morning as well, Euro Swiss. So I got out of that this morning in the propulsion gap. Where's my pen gone? So that's done and dusted. Another single trade. I put it in Telegram in Discord this morning. Virtually all my trades at the moment are singles. Just literally up, down, up, down, up, down. That's all the market's doing at the moment with the vast majority of symbols. So straight in, straight out in propulsion. There was a potential short there. Obviously, this thing today has decided to change direction. So this must be this update on US-China, basically. So basically just Trump backing off and undoing everything he's done because he can't make it work, basically, isn't it? It's just him. It's just Trump. China to lower tariffs on US goods to 10% from 125% for 90 days. So it's a pause. So yeah, be careful today. The market's going to be nuts today because obviously we've just undone. So in a nutshell, everything that's happened in the last 4-6 weeks, complete utter nonsense. None of it's going to happen. So it's just undo everything you've seen. So all these moves you're seeing going on here, potentially we're just going to undo the lot. So back up to where we were before the idiot opened his mouth, basically is probably the move, isn't it? But the thing that I don't really know now is is the world going to trust the US? He's shot himself in the foot in a royal way, hasn't he? He's screwed the whole economy. Europe's turned its back on him. UK's turned its back on them. We've just said, right, screw you. We'll just go to China. Cheaper, better. Why would we want you? We don't need you. So there's a lot of things that may well completely change here. We're pretty much back to origin of the move on the Aussie CAD look already. So I would give today a little bit of a wide berth. This morning's plan, before I came on stream, was to look for some extra opportunities to put some risk on. It's a bit difficult now because it's a bit too late to jump on these moves potentially, and I'm not actually sure which way you want to jump at the moment. So I think I might just wait today and see where we go. We're taking a second on the euro pound. Let's take that euro CAD. Can't do anything with that, can you? Pound US dollar. All right, we'll see what happens. Morning, Peter. You've sold the on-air sign? No. Where's it gone? I'll tell you what's happened. We're moving house basically, and we've been doing a clear up. So I did the loft this weekend. That was fun. 2 trips to the tip. Stuff that's been up there for like 6 or 7 years that I moved in with is still there in the boxes I moved in with. So we know we don't need it. So it just all went straight to the tip. But we're doing a bit of a clear up. I assume that's been cleared up by someone. Not the first time my belongings have gone missing without my permission. But anyway, live conference in Geneva. Yeah. So that's obviously to do with this. They're still talking. So just be aware there's probably going to be some volatility. When that press conference is over, the market might actually start a proper move. So morning Virginia, morning FTNet. Right, so that's kind of scuppered my plans for this morning because obviously we can't trade the indices. You can trade the indices. Obviously, you can do what you like. But after a move of that magnitude, ADR is like 28, 24 on the DAX. We've just done 22.50. So you've pretty much done an ADR on both of these. ADR is 82.50 and we've got 6,500 in there. So, yeah, I mean, up to you if you want to try and trade them. Which way to go, though? Still a 50-50 shot, isn't it? So I would imagine the markets will rally on this, or rather the stock indices will rally on this. So if you do want to trade this, the logical thing to do would obviously just be to go with momentum today. However, you've got a gap fill on both to the downside today as well. So there is an inefficiency to complete. So, it's like, take your pick. Do you think they're going to gap fill, or do you think this move is going to continue because of what's just been announced? One or the other, isn't it? So you take your pick, but could go either way today. Personally, I'm just going to leave it. The strategy is to trade a 20 to 40% range, not an 80% range. So there's no trades being taken automatically. But it could go either way. So up to you on the indices. I'm not getting involved. Aussie dollar Swiss 125. So watch the ADR dash today. I mean, what happens when Trump makes noise or when something to do with Trump is announced, the markets just go either into parabolic mode or into free fall. So these ADRs today, I suspect we're going to be seeing up at 150, 175, 200s possibly. So there is a good, these are the sort of moves where if you just hit the button in the direction, if we are going to put in a 150 to 200 ADR day, that's all you got to do. Press the button, but not my style of trading. Aussie New Zealand 150. I'm just going to quickly hit the button on that without any price action because I want to keep the average pretty tight on it. So that is my 4th position just gone in. This is a monthly level. I can't rely on price action on this because I need to keep the trouble with price action, obviously, is confirmation of getting into any trades. Is when you get that price action confirmation that you've got your sellers in control in this case. If this parabolic move goes on for 200 ADR, you're going to have a distance spacing of 200% of ADR between that position and that position, which really screws up your average. I would rather have an extra position on somewhere in between if it's going to go parabolic, just to keep that average a little bit tighter, because if it's gone parabolic in the direction against you, you really do want to try and get an exit on it. So you need to keep your average as close as you can. So just going to get in with a manual right there. Maybe right, maybe wrong, but I want to keep the average as close as possible. If you look at it on the 4 hour, what we're approaching here is last month's low, which has already been reactive twice. So we hit that low, obviously, which caused the low of that was not last month, the month before. We bounced at that, we bounced at it, then we finally flew through it on the parabolic news, which was Trump creating the news. We pushed back into it, hit it, and immediately rejected it. So this is going to be a pretty strong upside resistance. However, the news has just driven it there, which means that anybody that was selling here is probably out of their position now. So there is a very strong chance it could just plow straight through this today. So if it isn't going to plow through, and if we have got sellers sitting at that level wanting to keep this short, that's where they're going to do it, isn't it? So it makes sense to take a position straight there rather than wait for price action. You're going to get the best possible entry. If it's going to blow through, it improves my average. So it's a win-win situation taking a trade at that point. So yeah, just be careful of these today, obviously, because we could have big moves on the cards. See if there's any more updates. Neither side wants a decoupling. Effective embargo was not a sustainable practice. Yeah, so why did you let him do it? We would like to see China more open to US goods. They don't need to because they make everything in the world. They're just stupid, aren't they, really? It's just stupid. We'd like to see them be more open to US goods. They make everything and send it to you. They don't want your cars. They don't want your beef. They don't want anything you make, China, because they make everything. They are self-sufficient. Huge. Like David and Goliath. Don't know what they're doing. Anyway, enough of the political stuff. Well, your wife moved your sign. My ex used to move my money. Oh, that's all right. I'm happy with the sign being removed. The money, not so much. Morning elevated. Right, so we're going to go through all the FX pairs this morning. 125 euro odd there. So there's a lot of money-making opportunities on mean reversions on these, but I would be wary. There's one of two things is going to happen. It's always the way, isn't it? We've got a gap down as well. One or two things is going to happen. It's either going to be a V-shaped recovery, in which case then you want to find some price action to jump onto a long, or this is just going to go parabolic. Yeah, so look at the previous moves that we've had put in on Trump announcements. Yeah. Yeah, this is the first candle of that, or that. Whichever way you look at it, that is potentially what's coming. However, we have already undone that, so it may not be that that's parabolic. It may be that we're just resetting. If we're resetting, we're back to where we started already, so there's a very good chance of a V-shaped recovery on it. Yeah, doesn't matter what theory you think of, it's either going to be a recovery move or it's going to be a continuation. So you need to pick a side. Personally, I'd rather not pick either and just let it play out and then get back to normal price action. We have also got gaps to think about as well. So we've got gap down situations on a lot of pairs as well. I presume this is obviously them assuming that we were going to get some kind of agreement this morning. But yeah, gaps all over the place. Look, just trying to find something that's not. Yeah, so we have kind of almost done them, haven't we? On a lot of cases. Downside on the yen there. Difficult. Right, so what I'm going to do this morning, which is obviously not my plan originally, because the indices are a mess this morning, was I was just going to look for opportunities to get into some new positions and get some more exposure on, because we are range bound, and I was looking just to try and get some more exposure on different pairs. So get some uncorrelated pairs on. This morning, obviously, we've just potentially had a little bit of a fly chucked in the ointment, haven't we? So what I'll do is I'll go through all the pairs this morning. If there's anything that really stands out as obvious, looks good, I might jump on it. If not, I think I'll probably wait for this move to play out today. Don't forget, obviously, the US is asleep. So when the US market opens later, they're going to want to react to this as well. So there's going to be more potential movement. So these big, strong moves that you see going in, these parabolic moves that we've had, where you get these really, really big, huge days. Obviously, half of that is made up of European session and half of that is made up of the New York session. So anything that we see this morning that's large, 125, 150 ADRs, has the potential to move the same distance again this afternoon. So just be careful today. So I'll start at the top, I think. So these pairs up here, there's 7 instruments at the moment that I'm focusing on because I want to, at the minute, keep myself uncorrelated. I want to make sure that I've got good diversification across commodities, safe havens, and dollar. So those 7 pairs basically are uncorrelated. And I mean, they're all going to be correlated in this type of movement. Nothing you can do about that. But generally, they are uncorrelated. So it gives me the opportunity to trade in both directions at fairly decent costs. So those are my sort of focal group, if you like. However, if there is something else that leaps out, obviously, I will take it. But I'm just keeping a very close eye on exposure at the moment. I'm making sure that I'm not getting too heavily exposed. So Aussie dollar shorts, New Zealand dollar longs, not interested. Anything like that. So obviously the best setup in the world at the moment on those, I'm not interested because I'm already exposed on them. So I'll go through all the pairs. I'll concentrate on those first of all. And then obviously we'll see if we can find anything else. So if there's any pairs you want to look at in more detail, obviously let me know as we go through. Nasdaq futures is 3.5 up pre-market. Yeah, it will be. Everything will be up. So S&P, Dow, Nasdaq. Again, I was going to look at these this afternoon as gap down opportunities, but not now. So yeah, huge move. So that move there is 31774. That's an ADR, pretty much. So you've done an ADR in the Globex session. Just one of those days where you just don't touch it. I mean, if you wanted to, this is the thing. There's a lot of money to be made in these situations, yeah? So, an ADR of movement is worth a lot of money, yeah? If you don't think this is actually legitimate, short it. There's a gap down as well. Yeah, you got probably 3 ADR short there. Make a lot of money out of that. However, if you're wrong, you're just going to be selling it all day long and getting stopped out all day long. People will die today. People will blow accounts today in prop because they will just get an idea and they won't be able to flip themselves into the correct direction. So they'll be going, oh, look at this beautiful mean reversion opportunity. They will have mean reversion in their head all day and they'll just hit sell all day and just get stopped out for the entire day as this thing moves 300 ADR against them. Best thing to do when you see a move like that is go with the move. This is a steam train. Do not stand in front of it. Yeah, it's going because everything that we've seen unfold in the last 6 weeks, 8 weeks has just been undone. So, it's the same thing as happened last time. Go and look at the, whenever you're in these sorts of situations, you can only look at the history for any kind of guidance as to what potentially will be unfolding next. So if you look at something like the pound US dollar, when did he announce the tariff reversal? It was there, wasn't it? Was that the tariff reversal? I can't remember. Losing track. But, that's the sort of thing that you will find. We're going to put tariffs on everything. Oh, no, we're not going to put tariffs on everything. Yeah. That's what we've just had. The China one was the only one left. Oh, we won't bother with it. Then you're just going to come back down here, aren't you? What's going to happen? So don't try and go that way. It's going this way. It's about to break out of a 3-week accumulation. If it breaks that last week's low today, you've got nothing to stop it until we get down to there. US dollar Swiss ADR. Well, this is going to be a fun week, isn't it? Where's US dollar Swiss gone? There you go. So give it a week or two, maybe even this week. US dollar CAD ADR. I just really want to jump on some of these, but got no US dollar exposure on at all. Have now. Short in pound US. Not a normal trade. This is a breakout trade. So if it's not going to break out, it's going to pull back. We were rolling over anyway. So there's a head and very, very, very weak head and shoulders. Look at the head forming there. The right shoulder is about to break. If that shoulder goes, we're down. We've got loads and loads and loads of downside on this. So we'll see. But if the stock market's going to continue to rally this afternoon, the US dollar is going to go with it. So we should be down. So I'm going to short that one. Decision made. Right. So before we look at the pairs, I will go through the news. I was going to say over this weekend, we haven't had a lot of news. We obviously knew this was coming, this meeting, but I didn't realize the announcement was going to be this morning. So there we go. So there's not much else that's happened over the. There you go. There's all the news. Look. So that's the statement. So there wasn't much else happened over this weekend. Obviously, there's an escalation in India and Pakistan still going on. So there's a lot of potential for conflict escalation there as well, which is going to ramp up, instability, which creates fear, which drives down the stock market. So 9 a.m. Eastern time on Monday. Oh, and going back to what he said last week, remember? What did I say on Friday? He said, now's a good time to buy the stock market. Talk about manipulation. Unbelievable, isn't it? Anyway, but yeah, so there's nothing much else happened over the weekend. There's potential peace coming in Ukraine. I'll wait and see it. But apart from that, not a lot else that affects the financial markets. Morning, Franco. Morning, Rajiv. What's the reason? Does anyone know? Yes, Varshal. Yeah. If you're asking that question, you're missing probably the most important thing in trading, economics. This is what drives markets up and down. If you do not know about financial juice, you need to get on it because this is what moves the market. Important. Right, so just going to quickly cover this week's news. So 7 o'clock this morning, claimant count change. Why is that not updated? Oh, it's Tuesday, sorry. Monday, today, there isn't any news. Obviously, we've had news, but there's no forecast news. So claimant count change tomorrow morning at 7 o'clock may affect the US. The pound doesn't tend to do an awful lot. Sometimes it does. It's very, very dependent on kind of the weather in the economy. But at the minute, it's not doing an awful lot. Nothing to do with unemployment is really having a massive impact at the moment. That might change now, now that we've completely gone back to where we were before because nothing works. So basically what the US has got out of all of this is 10%. Whee, well done. You've ruined all the economies of the world and you've screwed everything up and you've made all your friends disappear and not trust you anymore for 10%. Good one. Anyway, so what was happening was there was no impact off of unemployment because everyone was expecting unemployment to go up because the trade tariffs were driving business profits down. And the first thing to go is people. So that was a given that unemployment was going to go up. And we have seen it start to creep. New Zealand started to creep last week. So there's things going to be happening on that. So these sorts of figures probably not very impactful at the moment, but that might change now if we're just going back to this normal tariff situation. So he said basically this morning it's a 90-day pause, if you like, same as he did with everyone else. So everyone gets to the table and goes, don't be an idiot. You can have your 10%, but just shut up and let us get on with our lives. That's basically what's going to happen. So we will find the news becoming more impactful, I think. CPI tomorrow afternoon, very important measure. This is what drives interest rates, inflation. So this is your inflation figures. Inflation is expected to go up. Absolutely no reason why it shouldn't go up. Month on month, yes, it will be going up because he put tariffs on. All businesses suddenly made up to 125% less profit, which is ridiculous. Or they stopped trading altogether, basically. He just basically stopped trade, didn't he? So, yeah. Obviously, if businesses are making less money, they can't charge more money. So it becomes inflationary. So very surprised if we do not get an inflation increase. That will be good for the dollar because it means that interest rates will stay stable for longer, which again is bullish. So bullish dollar potentially tomorrow afternoon. Obviously, today we're going to get a bullish dollar anyway because obviously, as you can see, it's flying. We're going to get a bullish dollar because of what Trump's just done, which is basically undo everything that was strangling the dollar. So we'll see. But that's tomorrow's news. We've got Bailey speaking tomorrow afternoon as well. Maybe something said from Bailey that is going to impact the pound, but I doubt it because we've obviously had our trade deal done already, and there's so little trade between the two. What was happening didn't really affect us very much, did it? So I don't think you'll see much from Bailey apart from confirming that we're going to drop interest rates by anything up to another 0.5% this year. So that's all bearish pound. So we should be staying bearish pound. He's not going to say anything that's going to change that. Aussie dollar wage price increase again doesn't really tend to do much. We got Wallace speaking Wednesday. Australian unemployment again. Australian unemployment not as impactive at the moment as it should be. We'll probably see some whipsawing in the morning. So just be aware if you've got any Aussie or New Zealand positions held overnight from Wednesday to Thursday, those are potentially going to get impacted. So may well get additional positions on or obviously take profits on them. We've got GDP for the pound. Yes, that will be going down. Yeah. Everything's kind of a given at the moment, which is why the news is so unimpactive because we kind of know what's going on. You can't really get it wrong at the moment by a huge degree. So potentially some more negative news coming on Thursday for the pound. PPI, again, producer price index coming through at 130 on Thursday. That is expected to go up. It went up last time. So PPI is the producer price index or purchaser price index. And that basically is cost of goods for manufacture. If that goes up, that is passed on to consumer, which makes the consumer price index go up, which is passed on to banks to keep inflation figures, interest rates high. So these figures being stable or increasing, which is what they're forecast to do, means that those interest rates don't change, which makes the dollar bullish. So again, potential more bull movement coming on Thursday for the dollar. We got Powell speaking in the afternoon as well after those numbers. So again, Powell under massive pressure at the moment. You can see the problem that Powell's got. He's under massive pressure from Trump to drop interest rates because Trump thinks he's doing it all too slow and it's not helping. All of this is going the wrong way because of what Trump has done. So Powell is stuck between a rock and a hard place. He's got someone in power telling him to do that. He's got the rest of the world and general economists in general saying, if you drop them, you're in trouble. And he knows that because he's not a stupid guy. So he's stuck between Trump and the rest of the planet going, he's an idiot, don't listen to him. And Trump going, do what I say or I'll sack you. Not a fun job to be in at the moment. But anyway, so he's talking. I should imagine he'll be very neutral because he can't be much else, can he, at the moment? Although he did come out last time and sort of say Trump was wrong, and that was retaliated against by Trump the next day, wasn't it? On Truth Social. Fake Social. Michigan, Friday afternoon. Michigan does tend to move the market. It's a consumer sentiment. It's mainly used by banks and institutions to dump large orders into the market on a Friday afternoon so they can get to the pub. So large manipulation usually comes in off the back of that. Usually see ADRs off of it, but it's not directional most of the time. So this week's news is very mixed. We've got two very important news events for the dollar. Whether or not they'll do much this week, we'll have to wait and see. But they are forecast to keep the dollar fairly bullish at the moment. So we'll see what happens with those. Right, there's your news. Let's just see if anything else has come in on. The indices are still rallying at the moment. Oh no, actually they're pulling back in. Yes, we are fading in the UK. DAX is holding. I really wouldn't want to short this today. Potentially good pullback play today on this. So there's your pre-market high for the FTSE. So somewhere out of there, if it gets back there, again, if you're long biased, is not a bad place to go from. Just bear in mind you have got the inefficiency to fill to the downside. So it's a really difficult decision-making process today. That is a good-looking long trade. If that fails, I would take a break short down to there, which will get back your money on the long. Really all I can see to play today. I'm not going to do it manually because I'd rather just wait. But yeah, there is an opportunity for that potentially today. But we'll see. Right, we'll go through the FX pairs. Thanks, Lee. You're doing well here in the US. We are doing well here in the US. Good. What are you doing awake? Man, what a week, staying in bed. Yeah, it's going to be one of those weeks. It's going to be one of those weeks this week. This is probably just the start. Obviously, when Trump wakes up and starts commenting on all of this, he's going to send the economists and the market into a bit more of a mess, isn't he? So look at that for an entry. Oof. Get more accurate than that, does it? So yeah, so it's going to be one of those weeks, pretty sure. Right. So Aussie New Zealand, I'm already short at the moment. First entry was taken there. Got second on there and a third on there. Took off the third and did some drawdown control just to keep the risk fairly low at the moment, which was the right decision in case we were just pulling back for a new leg up. So just taken the fourth on that. Obviously, that's brought my average back to 125, which is nice and close. So I will be looking to take a partial if we do an A-shaped recovery today. Obviously, this is the propulsion move. So if we do an A-shaped recovery today, back down into there, I may well take that off and just do a little DD control on that second position there. So just bank a little bit just to keep the drawdown as low as possible at the minute. But obviously no opportunity to take any new trades on it because I'm already in it. But if you did want to take a short on it, this is where you want to do it because we are in a lovely downtrend at the moment. And this is your previous support, turn resistance. That was the last reversal alert we had long down there. The reversal alert short is going to be right down there, like 150 ADR at the moment. So not much else you can do with that. The ADRs, obviously, I have quickly covered, but there's no point in looking at ADR with this move going on because this is obviously not being caused by normal price action. It's being caused by what's been announced. Your RSIs are all dead at the moment. The only thing we've got is the pound yen extended. So there's no point in going through the dash individually. We'll have a look at them as we go. Aussie US got out of that one last week. So that was a nice, easy short. So I took a partial off there. We pushed back up. Second entry, exit. So nice, profitable trade on that one. We've got a big whipsaw going in at the moment on this. Obviously, US dollar strength coming through. So at the minute, if we break the lows, if you think this dollar move is going to continue, which is difficult to tell, but if this is going to be a strong continuation dollar move, if we start breaking last week's low, previous week's low, and the 3-week low, when that area is gone, there's nothing but this propulsion target to the downside. So there's a very nice, big, long, strong move ahead. So obviously, the minute we've got the Trump, put the tariffs on, take the tariffs off. We're keeping the tariffs against China, and now we're removing the tariffs against China. So potentially that's the move that we're going to see. So you've got a nice pullback continuation potentially here. And as soon as we break those lows, you'll be off. So not an RSI extension. There's no technical reason to take it. But from a fundamental perspective, obviously, yeah, looks good. It's a 50% retracement. Not that that really means anything because this is just whipsaw off of the news. But yeah, continuation to the downside. Got a bit of a stronger move emerging. Just see if there's anything else being said. No, nothing else. So yeah, so obviously downside potential move on that one. I'm not going to take any more exposure on the US in case Trump says something else this afternoon. Swiss yen, I've got a short on at the moment. I've been in this for a couple of days. So this was basically taking that resistance bounce basically from there. We are kind of contracting now. So just looking for a push down into these propulsion gaps. Surprisingly, not a massive reaction on the Swiss yen here. So safe havens, this kind of what this tells us is that the safe havens potentially are probably empty. We have moved back into greed mode on the fear and greed index, meaning that the safe havens are probably not where the money is stored at the moment. So there's not a lot of movement going on here. So I'm just going to hold this short. I'm targeting basically somewhere in these propulsion moves. So yeah, I mean, probably all three of them will get hit, but it depends if we stay range bound on it. So I'm just going to hold that for the minute. Plan on it is to add more size if we break that high of last month, and then obviously look for a pullback from that breakout of the high, assuming it's going to be a false breakout, which they usually are. Euro Swiss, out of that one this morning in propulsion. Obviously, the propulsion gap held until that news came in. So next target to the upside is the previous propulsion retest there, which is ADR. But obviously, if this move is going to continue, there's no reason why this shouldn't just blow through it. But Euro Swiss not being as affected anywhere near as much as the dollar, obviously, because it's not to do with them. So difficult one. There's not really a lot of movement on the Euro Swiss at the minute. There's no reason why there should be. The only main movement you get with this is when the Swiss franc is manipulated for safe haven runs, long or short. So at the minute, you can just kind of get into it in any direction. So there was a potential short there, would have been very hard to get into. Apart from that, there's not really been any signals on this. I took that as a double bottom retest from the previous reversal alert. So we had the reversal, so I took that long there. Yeah, apart from that, not really anything to do with this. I'd be looking for shorts up at 150, 175 ADR with backup up here. Other than that, again, I would be happy to get back in on a triple bottom and then looking at last month's low as a potential bounce point for our second entry. So something like that. But right now we're bang in the middle of nowhere, so I'm not really interested in that. Euro pound. Have a long on. Second long has just gone in. So the EA has just taken the second entry long for me. Reversal alert is just about to go in, and it's taken the trade for me on a 3-bar reversal. So there you go. So there's a 3-bar reversal pattern. So it's taken the second entry for me there. Obviously, reversal alert, if you've got it set to take reversal alerts, it will get in there for you. If you're on M5, obviously, if you're trading on M15, you obviously have different signals. But so yeah, second entry taken on that one. Obviously, if this just pulls back up now, exit either in propulsion there or you've got a propulsion target there. So for me, that's a little bit tight. But the potential downside move on this is obviously back into these highs. So this propulsion move here, that is your accumulation break. So that is the first propulsion gap we know there's definitely buyers sitting at. As you can see, next long entry is there. So that will be my next entry out of propulsion, which will bring my average down. So I'll get out when we push back up and retest those lows. But we'll see where we go today. Obviously, these moves on the European instruments are not going to be as impactful as the US and the Canadian. So we'll see. Obviously, the Aussie and the New Zealand being in the Australasian sector will move more, as potentially the yen will. We'll look at the yen pairs in a sec. Euro CAD, nothing particularly exciting on that one. We have been holding this range now for a week and a half. The previous range that we held was there. So it's, it's news, sit around, news, sit around, news. Either we're going to sit around or it's going to break back up. So not really anything I want to do with this at the moment. This was the undoing of one of the things that he said. I can't remember what has been said and when, because it's been so much. But anyway, that is your next potential entry point. It's not really extended at the moment. This is obviously a news event. And the reason this is rallying is because of the Canadian dollar. Obviously, the US and the CAD moved together. They are very close trade partners, although not as much as they were. And that's not going to change either. That's not going to go back to the way it was. So it's interesting to see that the Canadian is still moving in line and in sync with the US. So that's about to trigger 150 ADR. There we go. So, that's Euro US dollar. Euro CAD will as well. In a minute. Didn't do it on cue, but now Euro CAD 150 ADR. So that's obviously pushing very, very hard. Just, bear in mind any mean reversion. If you're mean reverting in a steam train, it's going to be a lot harder. Wait for it to slow down. Wait for some signs of some bullish price action to come in, ideally, and take it. Unless you're already in positions and you need to keep that average tight, then obviously you can just take normal entries whenever you want to. So watch this high of this propulsion gap. So this is that high there that got broken. So the higher the propulsion gap, potentially you might find some buyers in. But like I said, this is an undoing of this. Yeah. So anybody in this move that has already exited does not need to be long here. They will flip short. So any money left here is just going to get flipped in the other direction, which will drive this further and faster through. So this area down here you want to be watching. That is your previous month's low. You've got this area just before the previous month's low, which has been bought up multiple times. Yeah, this is about 250 ADR to 275 ADR today. So if we're going to push a 200 plus ADR day, that is where I'd be interested in buying it. Yeah. And assume that we are going to pull back at least a percentage of that move before it continues, if it continues. So there's no news on the euro this week at all. So there's Zoo, it doesn't do anything. So yeah, there's nothing that's going to move the euro this week at all. So from a perspective of directional bias on this, Canadian dollar is the only thing really that's going to move it this week. So if we can get a stronger push, even starting to take a position around about 220, 225 ADR, if it pushes sort of 3/4 of an ADR beyond that today, you could have two positions on today and try and get out on a pullback into that propulsion move. So some good levels coming up. Pound US dollar 125, which brings me nicely on to pound US dollar. So obviously I've shorted this morning on the break. So shorted the break of that low. So this is your 2-week low, your 3-week low, and last week's low, all been blown through. So there is a propulsion gap here. So this small accumulation break, which was retested, that is a potential sticking point. That is also your previous high, monthly high, New Zealand dollar, US dollar, ADR. Looks like we might have had a bit more news. No, just stronger pushes coming through. So there's more participants entering the move, basically. So there's a couple of points on this, obviously, just to be aware of. You've got this area here, which obviously was where the buyers stepped in. You've got that accumulation break there. So somewhere around there, you're probably going to find there's a sticking point today, because it'll have moved 200% of its ADR when it gets in here, and it's probably going to find some resistance. some support down here. Other than that, really, this is your location. That's your target. So all the way down to there. If you want to hold it, you know, but I'd rather get in and get out, get in on a pullback, get out, get in on a pullback, get out. Yeah, rather than, I'm not the type of person that just buys and holds. I'd rather just get out, take one ADR, profit, bank it, look for a re-entry. I'm not a long-term holder. So we'll see where that one goes, but that's the play on that as far as I can see at the minute. Oil, obviously that will be rallying back up again, but whether that will hold, still demand for oil slipping, will increase if conflict arises. So if it kicks off again in India and Pakistan, probably see a rise in the oil price. Was originally targeting $50 a barrel, slightly changed obviously now. So yeah, don't know what to do with oil. I'm not trading it. I did want to get in short on it. Glad I didn't. But yeah, you got a nice weekly 2-week high coming up out of propulsion there. That's 175 ADR. So there is potential if it gets up to there today for a good short opportunity. But direction-wise, I mean, we could be holding a range here. But we have got the gap to fill all the way up there as well. So not really trading it. Aussie dollar CAD. So that's just broken out, obviously, to the upside on the news. And then, broken out to the upside on the news and then reverted back down. So we are range bound on this at the minute. Both commodity pairs. Commodity markets have been hit quite hard with the tariffs. So obviously commodity against commodity means that you're going to get movement in the same direction, which creates a range. So again, downside target, all of this movement that we're seeing here, if it's going to be a continuation move or an undoing of the previous, then we're just going to get back to the old propulsion gaps, which caused the latest move to the upside. So we'll see what happens. Obviously, it's very early stages. We've only had this news for an hour. Could go either way, but looks good as an upside rejection, doesn't it? So reversal alert, very tricky on this one. You're not going to get a very good entry. You've had a 15-minute reversal, which has just gone in there, but it's kind of 2 candles, isn't it? Really not a very pretty entry at all. But it is an entry short. So you've broken back down inside Friday's high now. So some kind of pullback entry short. So this candlestick here, which you've got 9 minutes left on, at the moment is going to form a propulsion candle, a propulsion gap there. So if we sit around here, that would be a good spot to sell it at. So that would be your second leg of your M pattern short. So selling it up here in this propulsion move. The propulsion hasn't obviously drawn in yet because this 15-minute candle hasn't closed. When it does close, that's where your propulsion gap will appear. Good looking short potential out of that. Aussie dollar, not going to be particularly strong long term. I would have said until this morning, Canadian dollar wouldn't be very strong long term either, which is why we get sideways. But this obviously now proves that the Canadian dollar is moving in sync with the US still. So yeah, if that's going to be the case, probably continuation short, at least down into propulsion or last week's low. So you've got a good 150 ADR, or rather half an ADR, 3/4 of an ADR, something like that. Move to the downside, still ahead. Aussie dollar Swiss pushed out to the upside. So Swiss franc weakness looks like coming in this morning. So we're pushing up into propulsion again, downside from here potentially, or previous month's low, which was, that's the normal range that we tend to deal with. This is Trump. That is undoing of the tariffs. And then that, difficult to pick a direction on this one. Indices back in square one, are they? Yeah, so it's just a knee-jerk reaction. Yeah. Right, okay, so there you go. So that's the play that I was talking about. If we break that level, obviously the play today is the gap fill. Yeah. See what the US indices have done, because obviously the European indices are less going to be less reactive to this news because it's more about the US economy. It's about the worldwide economy, but obviously the US is the most affected by it. So that's your first 5-minute propulsion move. I mean, this could completely fade, couldn't it? It's impossible to tell. You know, all these sorts of moves we're getting at the minute with these tariffs. It's not something we can go back in history and go, what's the best way to play this? Because we haven't had this. It's all very new to everybody. We haven't got any economic historical event that we can say, right, this is what normally happens when these ridiculous tariffs are applied that no one has ever seen on the planet before. And this is what happens when they're removed. Markets are making it up kind of as they go along. And obviously it's bank and institutional movement. So how they're playing this, we don't know. We will do next time if there's ever a tariff war of this magnitude, which we haven't had before. You know, last time he was in, we didn't get this. We had tariff wars, but we didn't have them this big. You know, 100+% tariffs, just not on the table, is it? Unless they're restrictive tariffs. Yeah. So it's normal to have tariffs of over 100%, and they're basically blocking tariffs. So it says basically you can buy our rice if you want to, but it's going to cost you 100% more than if you grew it in your country. So what we're saying is, don't buy our rice, or don't buy our cars, or whatever it is. Yeah. So tariffs over at the levels we're seeing are quite normal, but they're blocking tariffs. They're designed to stop trade because countries don't want to do it. This is designed not to stop trade. It's designed to punch someone and get them back to the table and then sort it out. Whereas you could have just approached them. Yeah, this is what the problem is. Markets don't know how to deal with this. So this could well be a complete A-shaped recovery. This is a panic. And actually, let's wait and see what happens. Yeah. What do you do with it? You just have to pick one. You are a trader who has a 50-50 probability of your trade working out. Pick a button. One of them's going to work. Whether propulsion moves are going to pay any attention to this, we'll find out this afternoon. But at the moment, if this is back here this afternoon, it's business as usual, isn't it? But I would imagine the US markets are going to open with a pretty big whack this afternoon. So pre-market range breaks this afternoon might be on the table, but yeah, they're all recovering. You know, we got these gaps. Look, market doesn't like this. This is an inefficiency in the market. Markets woke up this morning expecting to come and finish unfinished business from last week. That's really going to scupper them. This could well be banks and institutions just selling like crap to each other to get the price where they need it to, and then market will resume as normal. Who knows? Most of it's algorithmic anyway. So, right. US Aussie dollar Swiss pushed up to the upside. So sell opportunities out of propulsion. But again, these moves are a little bit unnatural, aren't they? So wait and see what happens. There's no real advantage, Aussie or Swiss at the moment. Swiss is obviously being moved on safe haven runs. Aussie dollar yen. So we've had a lot of weakness in the yen by the looks of things. Yeah, big weakness in the yen this morning. So we have had some safe havens removed this morning. So yeah, looking at highs and lows again. So highs, you got 2 monthly highs coming up on the Aussie dollar yen here and here. We are extended on RSI. So good looking opportunities for shorts right now. So if you are looking to get into these 15-minute, 5 minutes, look for reversals. So you got a reversal alert potentially starting to form on the 5-minute. When you get that break, if that is going to undo, that is your entry. You've got nice backup opportunities coming up sort of there. So you're looking at half an ADR to 1 ADR, basically. Really nice initial short, and then your second short up in there somewhere. Just bear in mind, it's very expensive to hold. So again, gap fill to the downside on the cards as well. But market structure very clean on this. Yeah, it's riding very nicely in a trend at the moment. The yen to the downside. Pound CAD ADR. CAD Swiss, again, parabolic. I mean, US dollar yen 125 ADR. Yes, lovely propulsion gap, but is it going to be worth sitting in front of this? Yeah. The guys that sold this here, have they got the same incentives to sell again? No, it's all changed. So, there's no saying that's going to hold. All of them, we are at exhaustion points, though, on a normal day. But this is not a normal day, is it? You've got downside gaps and you've got propulsion gaps, which should be causing that sort of movement on a normal day. But what will happen today, we don't know. Look at some of these moves we've had on tariffs. Yeah. It's just, 225 ADR is not off the table today on anything. So just be careful. CAD Swiss, not US dollar Swiss. Over there for a minute. It's just going to go off all day. A lovely looking short opportunity. That's also a monthly level. So that is previous month's low. Although, during all the tariff nonsense, it's all been blown through multiple times. So, that's not really valid anymore, is it? It's not very clean. So I wouldn't necessarily think that's a great short. It may well work out, though. So up to you, but I'm not really interested in it. CAD yen, very much the same. You can see it's blowing through it's blown through previous week's high, which was previous month's high double top. That was a very strong level, that. Straight through it, no problem. We're up at the next month. We're going straight through that with no problem. Shorting these is incredibly expensive anyway. So not really worth it. So I would say if we are going to continue with the US and the CAD strength, you're wanting to look for pullback opportunities. So any of these that have broken out to the upside, you want to be monitoring them for retests of previous highs and lows. So that's last week's high there. Be a good spot. And the previous month high, which is the 2-week high, is there. So flag break long or pullback 50% long. So, these are the sorts of things where you're just going to stick your alerts on there. Just set an alert at last week's high, set an alert at the previous week's high. That's your trade plan. Propulsion gap's completely filled on that CAD yen now. It's just when are we going to run out of momentum? When are we going to run out of orders to complete? US dollar Swiss RSI. So Aussie Swiss and US Swiss are also RSI extensions now. There you go. Up above the 80 level. Normally that's the level where you would go, oh, that is an absolutely A++ setup. Standing in front of a steam train this morning, though. As you were here, look. Yeah. Yes, normally that would be a great setup long, but not when you've got a shift in world economics happening. And again, we're shifting back now, aren't we? So potentially, this is the thing. We're talking about this being a complete undoing of it. Let's wait until Trump wakes up, wait until Trump opens his mouth, because he may come out and say what we've agreed this morning is a starting point, but, and his buts can be hugely detrimental to the market, can't they? So, but it looks obvious to me that at the moment, we're going to want to continue this move. So looking for pullbacks rather than mean reversions is probably the best way to play them. Where did we get to? Aussie yen, CAD Swiss, CAD yen. Just looked at CAD yen. So the euro pairs obviously are all bearish at the moment. There's not a huge amount of bullish guidance really from the ECB at the minute. They're all about dropping interest rates. They're all about having to spend more money, but their bond purchases were all done back here. So it's really a case of, I think the euro is on a very, very steady, slow decline, basically. Shouldn't be parabolic or anything. It should just be dropping gradually as they drop interest rates, which is the norm. So looking on this one for any kind of mean reversion opportunities. So there's a good long opportunity now, although it's been caused by this morning's news, for getting in and just riding the pullbacks down, or you can just wait for it to pull back and drop and continue with the current trend. but you are coming down now into an area of accumulation. So this is a nice area of balance we sat in for weeks. We were just happy to conduct business here. That's where Trump announced that he was going to pull out of the Ukraine and stop helping, and we needed to stand up for ourselves. So they did a massive bond purchase, and then the tariffs came in. So this is the area basically where we've returned to, which you're probably going to find normal trading in theory could recommence. So whether we can get back up into these areas, difficult to call. It's going to need some seriously weak Australian dollar movement, i.e. bad commodities again, or it's going to need some really good strong euro news, but there shouldn't really be any. So it's hard to call at the moment. Can trade this one in either direction. Would rather be shorting it than longing it, but there is an RSI extension to the downside. So the trade plan on this will be getting in on it this morning. And then you've got 225 ADR there, which is basically one ADR of movement back down into that previous monthly low to scale in for a second trade if it continues down, and then get out on a push back up into these sorts of areas here. But not the greatest setup in the world. Euro yen coming up to a nice double top. Not really had any movement on this at all this morning. Look. So yeah, last week's high potentially. That was part of an A-shaped recovery the week before. Resistance. Yeah, market doesn't seem to want to push much higher. There's no reason it should. We've got a weak euro and we've got a weak yen, which means that we get a range because they're both weak. So doesn't really matter. If you get an extension and take it, you should be all right within 2 or 3 trades. So not quite extended enough at the minute, but it could be this morning. So normal RSI trades on that. Euro New Zealand, again, same as the Euro odd. They're the same pair, pretty much. So trade one or the other. Same story with this. We're back in accumulation. Yeah, and we're kind of just settling in this area. So you've got a nice weekly low coming up at 125-ish ADR, which is where that monthly low also is. So that's a pretty good little bounce point potentially there. Euro US dollar, obviously this one's going the same way as the pound US. This is just the US rallying. So yeah, you're out the lows. I would have said last week, don't want to be buying the dollar. How it's all changed today. So yeah. Is the dollar going to continue or isn't it? No one knows. So, but you've got all these propulsion gaps to the downside, potentially, if it is. But you know, is the dollar going to be as strong as it used to be with what's happened? That's the question. So your obvious resistance is there, which is about 175 ADR today. You've got a previous high, which was that propulsion gap, which is blown straight through on that news. So these lows down here out of that propulsion gap, you've got an old monthly level there, which has been invalidated multiple times. So very difficult. There's so many different areas down here. You could pick a support, but you are massively extended on RSI to the downside. So yeah, potential for a pullback from here. You're going to have a whacking great propulsion gap going here, wherever this next hourly candle closes, and that will be your upside target. However far this drops, if it drops, it might just come straight back up today, mightn't it? So again, not easy really to pick what to do with these at the moment. Pound US dollar, obviously, is pretty much the same. So one or the other, not both. Pound pairs. So pound potentially should continue to be weak as well. There's nothing, we're going to drop another 0.5% on interest rates this year at the moment. We haven't been affected massively by the tariff deals. We got undone very, very quick on the pound. Yeah, sideways. Sideways to bearish for the pound for me. So any extensions really to the upside would be good opportunities for shorts. As you can see, you can pretty much trade it in either direction at the moment because there's no real strength in either direction. Pound CAD, same thing. Obviously, we're just bouncing around. Look at the weekly highs and lows. We're range bound. Yeah, so we're forming range highs. We're forming range lows. So, yeah, anywhere down here, be longing it. Anywhere up here, be shorting it. Obviously, if you've got an RSI to trigger the entry, brilliant, or an ADR, potentially. Pound Swiss, we've just broken out the highs now on this one. So again, this one's potentially off. So this does look like there was actually a fair bit of money in the safe havens, because obviously this move has undone the safe havens, which means a sell on the Swiss and a sell on the yen. And obviously they are all being sold off. So potentially you could have a couple of days of this. So all these propulsion gaps to the upside targets. So that is your next support, previous resistance, turn support. So that is a very strong level, which we haven't tested yet. So yeah, looks like a good target to the upside, doesn't it, for long term? Say long term, you could be there in 2 or 3 days easily at the moment. But we could also come back up all the way, return to the origin of the move. But again, there's no real strength in the pound. This is weakness in the Swiss franc that's causing this. So safe haven run, undoing of the safe haven run. Yeah. So this is the undoing of the safe haven run. And as long as we keep doing that, and also the Swiss have had negative interest rates, or rather zero interest rates last time round, New Zealand yen ADR. So that means that the Swiss franc are going to probably reduce interest rates back to zero. Inflation hit zero. Sorry, what was I saying? Interest rates, but inflation hit zero. So therefore, interest rates are probably going to hit zero on the next announcement, which is going to be negative Swiss. So you've got pulling out of the Swiss safe haven coupled with negative interest rates, or at least zero interest rates, meaning everything should push against the Swiss franc. Unless Trump comes out and says, do you know what? I don't like China anymore. We're going to put 125% tariffs on them. Then we'll be back down there. Again, you can't factor in Trump. It's just going to happen, which is why it's a bit dangerous at the moment, and you need to stay low risk, low exposure. Swiss yen, pound yen. So again, same thing. We're pushing back up into these highs. Safe haven being undone. Don't want to be shorting this. It's the most expensive thing on the planet for me at the moment. It costs $40 to short hold. Not interested in shorting it in any way, shape, or form. Pound New Zealand, again, stuck sideways. So any extensions to the upside, you can see that's the extension short I took. That was the last trade I had on this one. Haven't had any more entries on this. I would consider taking a short up here. I would like to buy it down there, but right now, bang in the middle of nowhere. So I'm not interested at all. There was no movement on this, so I'm not interested. Can't get in or out of it. So that's the potential upside target, 175 ADR. So if you're getting in on this, which is what I would look to do, last week's high, but really previous week's high would be better. But anywhere around there would be a decent entry if we did get an RSI extension. That is where you're going to be taking a second entry, somewhere in propulsion. So don't know where this is going. There's not really any reason for it to go anywhere at the moment. But if you look at it on the higher time frames, it is just a sort of choppy mess at the minute. So there's no directional bias. It's not going parabolic in any direction. So you can kind of take any extension you like on any time frame, and you should be okay within 2 or 3 trades on it. There's no reason for that to change at the moment. New Zealand dollar CAD. Maybe we should take a break and trade Pokemon cards. We could do that. I don't know how to trade Pokemon cards, but we could do. Can you make money trading Pokemon cards? Because I kind of have a mortgage to pay. Might be a problem. Selling Pokemon cards that are very expensive, yes. There's something there, Franco, but no. Can't trade them. Sideways at the moment. See all the propulsion gaps getting filled beautifully at the minute. We've got this big downside move. This high is holding very nicely. So if we could get a move on this back up into there, would be lovely. But obviously with the Canadian dollar rallying with the US, the most likely move, if this is going to continue, is down. So if we break those lows, there's a good opportunity for shorts. Obviously, any reverse alerts you've had this morning are going to be hideous. As you can see, it's just a mess, the price action. So not a lot you can really do with it this morning. It's a short, obviously, today. Low time frame, you could try support rectangle bounces. They probably have got half a chance of working because it's just going to flag and drop and flag and drop if they're going to continue the move. But as we've seen from the US indices, They are holding up a little bit. Yeah, the propulsion gap's holding at the moment. But European indices, no. Off. So, right, gap fill. So there's the play that I said about short to the gap. You are filling that virtually now. The DAX gap fill is a little bit further to go at the moment. Watch this high as well. So somewhere in this area, if you're short, I would be looking to escape, just in case we bounce out of the highs. When we do gap fills, we don't necessarily come to the pip. We come to the area. Inefficiencies are finished when they're finished. If banks and institutions are happy to take small losses because of other profits or other hedges on the indices or the currencies, whatever they're trading, you don't necessarily come and do it to the pip. So I'm always wary of highs prior to the gap if they're close, because I've seen it bounce out of those plenty of times as well. So watch that area, but obviously that would be technically the gap fill on the DAX. So there's plenty more downside on it. FTSE as well. FTSE is probably similar. I know. No, FTSE was dropping on Friday. So that's your recent kind of highs, which is pretty much the gap fill. But, you know, if you're seeing, and this is where price action scares you out on low time frames. If you're seeing wicks forming to the downside like this, it's obviously indicative there is buying strength. However, it's not that strong, is it? So there's the last down candle. The last bullish candle was a lower low and a lower high, which is actually bearish. The next candle after that was a double top, spinning top, which made a higher low double top, which is slightly bullish. But there was no reason to get out on that candle. It wasn't bullish. Then we had a new bear candle go in with a lower high and a lower low. Now we've got a new lower high and a lower low going in. There's no signal here whatsoever telling you to get out of this at the minute. So stay in it. Sure. Right. 175 euro US dollar. So New Zealand dollar CAD, again, Canadian dollar rallying with the US. So I'd be loath to try and long this at the minute. Again, if it's the same as the others, if we break the current lows of the last 2 to 3 week ranges, you're going to flush down into the origin of the move. So these propulsion gaps and that high, you know, this clear air. There's nothing but clear air. Same as that. Yeah. There's nothing to stop price until you get to this area here. So it will just go because there's no reason to stop it. This is accumulation. This is balance. This is price discovery. This is the last area of trade. We are going to discover if we can trade back in this area again, or if we can't, we will reject it. That's what price discovery and balance is all about. New Zealand dollar Swiss sideways. That's your short right now. Look. Weekly high, monthly high, propulsion gap, breakout. But this is all the Trump move. So if you think it's a nice potential short, great. RSI extension, no reason not to get into it. But obviously, if this is a safe haven rollout and we're pulling back out the safe haven, Swiss and yen, it will continue to move in this direction. How much, we don't know. I thought they'd already pulled most of the Swiss move out, as you can see, but maybe they haven't. So if that is the case, we might see further movement, in which case then you're looking at coming back up into here, or maybe around about there where we broke down. So somewhere around about 225 to 275 ADR from where we are at the moment. So the upside is potential. So it's either going to go from here. If it doesn't, you'll be scaling in a couple of times up to there, which means you'll have gone all the way up there without a pullback, which means you'll get out when it comes and retests that high. New Zealand yen, that's already broken out. So highs. There's your monthly 225, 125 ADR to the upside. You're not far away from that right now. Again, running away from the yen could continue. It's far too expensive for me to short it. Yeah, bit of an odd one. I was expecting the yen to be more powerful than this. But it's not at the minute. After the intervention move. Where is the intervention? Miles away, aren't we? So there's your intervention move. Since the intervention, we have done nothing but be bullish. There's your trade tariffs. So we are just pulling back to pre-tariff levels, and pre-tariff levels looked like we were pulling back for a new downward leg. So, but again, this is the question mark that all economists have at the moment, and what the discussion is mainly about. This is before tariffs. It looked like the yen was powering up. They're increasing interest rates. They haven't got as much US bond holdings. They can't liquidate it to do more interventions. So it looks like we might see some strength coming into the yen. This all happens. What is the current situation of the Japanese trade? Don't know. It's all different now, isn't it? We've got new deals in place. We've got all sorts of stuff is changed since here. So are we going to continue on the previous direction? And this is obviously all the speculation if the tariffs were removed, which it looks like they have been. Is that what we're going to do? Or is the world a different place now? In which case, then we might see some more negative yen. In which case, then they're going to need to find some way to buy US bonds so they can retaliate with new interventions. We're back in that cycle of trying to guess them again, aren't we? New Zealand, US, that's pulled back, obviously, and been sitting around. But now, obviously, US strength, we should be seeing this drop. So, again, we've broken out of the 2-week low. That's last week's low. So if we break last week's low again, clear air, absolutely nothing until we get down to that propulsion move, which was the break back up, undoing of the tariffs. Yeah, it's absolutely clear air, drop 600% ADR. So six days worth of strong movement in one direction over a period of however many days or weeks it decides to do it, if it breaks that low. US dollar CAD, obviously all of these are going to be inverse. So these are all US dollar crosses, so base crosses, so everything up. Broken out of the 2-3 week highs. Yeah, we're off. So you've got this area here, which was this propulsion break. So we hit that level and then we slammed straight through that. So propulsion candles are caused by opposite flips. So where you get buyers in the market who get overwhelmed, as soon as they're overwhelmed, they flip short, because obviously banks and institutions are always in. They're not taking a trade, getting out, sitting there doing nothing. The money's always at work. So you're always long or you're always short. There's always a position. So this large candlesticks usually are caused by large orders being folded in one direction and placed in the opposite. So this is usually where you find them, at support resistance areas. So there you go. So that's the propulsion gap short. So everyone flipped short there. That would be the area you would expect sellers to be in. Was the situation there the same as the situation when we get back there now? No. Will it hold? Don't know. So we'll see. But that is your target to the upside. You will get some reaction there. How strong it will be, we'll have to wait and see. So there's a potential short opportunity coming out of that propulsion gap. But I'd long it until you get there, or just not touch it until you get there, basically. And then obviously you've got a really simple backup. Yeah, if you short that and it doesn't work out, second short average out on a pullback of this leg. But, you know, look how long some of these legs are without any pullback. But this is the Trump tariff stuff. This is the undoing of the Trump tariff stuff. We could be back up there, couldn't we? It's very, very difficult to tell what's going to happen with these moves now. And obviously what's going to happen, you know, every day. Everything changes every day, doesn't it? They might be sitting around the table negotiating, going, yeah, it's going brilliant, it's going brilliant, going brilliant. And then someone goes, what about X? And they go, yeah, that's not going to work. We're back down to square one again. So propulsion sell on the US dollar Swiss there. Again, what we've got at the moment is the Swiss franc being sold because they are pulling money out of the Swiss franc, because they put it there because they're worried about the dollar. Now they're more confident about the dollar. They're pulling the money out of the Swiss and putting it into the dollar, which means you get twice as much movement on the US dollar Swiss, because you've got a negative Swiss and a positive US at the same time, causing twice the movement. Hence, we're getting the biggest ADR extensions on these on this pair today. So again, we're in an area where we had very strong selling, but that was because of a news event. So you can see that we've blown straight through that upside propulsion gap this morning. We've blown straight through that one, which was all kind of part of the same thing. So this is all one big move, really. So at some point here, you're probably going to find some resistance upside, but how strong it will be, we'll have to wait and see. Origin of the move is all the way back up here. So that could potentially be where we're headed. So pullbacks into last week's double top high, or rather the 2-week double top high. Actually, it was last week's high as well, pretty much. That accumulation break this morning, that would be a beautiful long if it was to get there. I mean, you've got to get all the way back there. Very, very hard to get there. So that's your upside on that one. And US dollar yen, obviously broken up to the upside. So we got sell opportunities up in propulsion here. So this is the origin of the move originally. Again, expensive, very, very expensive to short it. I'm not interested in shorting US dollar yen. Right where we are now is a previous support resistance area. So again, for a short-term intraday, drop down M5, reversal alert is going to be there. That could be a decent short, but you wouldn't want to really play it much further than back down into here. So tricky day. You know, days like this, you can guesstimate as much as you like, but no technical analysis or fundamental analysis is going to help you. Go with the flow is what I would usually try and do myself in these situations. So if the pound, like the pound US dollar, yeah, I'm short because this thing's collapsing like you wouldn't believe. So unless something changes from that news that we've had this morning, there's absolutely no reason why it shouldn't continue to do what it's doing, which is downward. So we've broken lovely supports. So again, like I said, everybody that was longing here, that took the breakout short, got rolled over, they flipped long, they re-added to their buys. Every time we've got near this area, they've bought it. Now we've blown through that area. Everybody that was trying to long this, didn't get anywhere, is shorting it. So bang. And there's nowhere really to stop. This is the only propulsion move in between that we've got, apart from the break of the high. So those are your areas to the downside. Loads of room. Be aware as well, if you're using the position trader EA to manage your positions, I have mine set at 1 ADR targets, so it will automatically get me out at 1 ADR, as you can see here. So as soon as price moves 1 ADR, I'm out, I'm done. Because obviously the average daily range is the average daily range. When we hit the average daily range, I expect the move to stop. So therefore I get out of the trade. So from here, an average daily range is going to be somewhere around here. So I'm halfway to target already. So you might want to, if you want to hold these, just knock that up to 63. 3 or something. Just set a larger target so that you're not getting out here on a move you're expecting potentially to go down to here if you want to hold it. As I said earlier, what I would rather do is get out at 1 ADR, wait for a pullback, and then get back in again and take another ADR, wait for a pullback, get in again, take another ADR, and take 3 ADR out of it in that way. That way you're not stuck in a move that may go like this, not banking anything. At least you've got something banked, and then you've got a reset so you can get a new position on. But, like everything with these moves, one of two things happens. They either V-shape recovery or they flag and break. So one of those is going to happen today. And if it obviously is a V-shape recovery, my next entry will be above the high of the day, and I'll scale in with the second short. But we'll see. See what happens. We'll come and have a look at it this afternoon. I'm back on at 2:30 this afternoon for the New York Open. We'll have a look at, obviously, where we've got to. There are tons of RSI extensions, obviously, today. They're all because of this news. So, yeah, pay attention to why the movement's happening. Like I said, if you're not keeping your eye on financial juice, you're not understanding what's going on in the financial markets, there shouldn't be any trading going on, because this is what drives it. So we know why this is happening. We know potentially it's an undoing of the previous moves. So look at the last moves. Look at what we could potentially have here on our hands. So, that's what we should expect. But whether it happens or not, we'll have to wait and see. So basically, the upshot of this is US are coming out with 10% on everything, aren't they? So we just basically, the US has, out of all of this stuff that we've had happening, the US has gained 10% tariff. It could have just done that in the first place, and then it would have been normal trading for the last few weeks, wouldn't it? But hey, it's fun. Right, there we go. So we're bouncing out. There we go on the FTSE. So we only got down to there. Didn't quite get it. You know, this is just what I say. Your gap fills are rough. I would class that as done now. I mean, it might obviously just blow straight through it today, but I would class that as filled, basically. So there's your bullish price action gone in. Higher high, higher low, bullish engulfing. So bears getting run over, bulls taking control. However, that is where potentially, if we're continuing short, we might see some action come in. Whoops. So anywhere in this area today, potentially got sell opportunities. And the DAX, why haven't I got SRP on this either? So DAX, you've got loads of room still on the DAX, look. All the way down there. So I think there's probably more downside on the FTSE as well, but we'll see. See where we go. All right, that's all for this morning. Morning, noob. You're late. I'm going. I'll be back this afternoon at 2:30 for the US Open. There's no forecast news today, dead. So I'll be back for the US Open. Whether I trade the US Open or not this afternoon, I will play by ear. It all depends what happens this morning, really. Obviously, we've had this move. If the market just sits around with slightly higher volume this morning and doesn't really do anything, I would say we'll probably break long, but I don't know. Obviously, as usual, I'll be playing ranges. So if the move at the open is 20% of the opening range or 15% of the ADR, yeah, I'll trade it as normal. But other than that, I'll see where we've gone. It's always difficult on days like this to know whether or not you should trade, because this is obviously not normal. So whenever you're doing any back testing, strategy development, system development, you tend to try and remove outlier events, because outlier events skew results. If you're only getting like 3 or 4 days a year where something's going completely nuts, you're going to get them still, but they're not what you should rely on as your main part of your strategy. As long as you've got something to circumvent loss in those situations, or if you make 10 times more profit than normal in those situations, you remove that profit to give you the real equity curve you would achieve when they don't happen. You know, this is one of those days, isn't it? So, you know, a Globex session that does an ADR very rarely happens. We've had one today. So the US markets are going to be a little irrational at the beginning. Whether that means they move or don't move, we'll have to wait and see. But it might be one of those days where we just go, right, let's just reduce risk for the day. I'm actually on standard risk today because I had a profitable day Friday, had a profitable week every day last week, pretty much, apart from one. Yeah, so I might just remove risk by reducing down to maybe trading the NAS and the Dow, or the S&P and the Dow. In fact, I might do the S&P and the Dow and leave the NASDAQ out, because the NASDAQ's the most erratic. But I'll see where they've gone. We'll have a decision on that later. All right, so back at 2:30. Anything you need before then, I'll be in Discord or Telegram. Other than that, have a good day, and I will see you next time. Have a good one.